Shifting focus to Piramal Enterprises, which has signed a definitive agreement to sell its healthcare insights and analytics business for almost $950 million. The transaction is expected to be completed by February end, but it's also subject to shareholder approval. Darshan Mehta caught up with the Piramal Group chairman Ajay Piramal to understand the rationale behind the deal. Listen in.
This business really is in data and insights, and this is a business which is a global business, and in fact there's no sales in India at all. So it is a business which is the sales take place mainly in the US, Europe and Japan, and we thought that this business, we need to grow it because there are opportunities to grow, and the best way to grow it is to have a certain size. So Clarivate, who has going to be taking over this business, is a $1 billion company. Besides this, I think we got a good valuation at $950 million. This is a 5 times multiple of sales. And so I felt that it is in the best interest of our shareholders and our employees that we have Clarivate as a owner.
When you had invested in it, what was the vision that you had? Do you think that at this time when you're exiting it, all the targets that you had envisaged at that point of time have been met so that you would want to exit?
So when we invested it, it was in 2012. We had paid a consolidated amount of $650 million. But at that time, the dollar was 50 rupees, and now it is 72. So overall, we made a decent return on this. And I think we wanted to focus really on our financial services and pharma business, and we felt that the value that we were adding to it from here would not be equal to the value that a Clarivate could add.
Is there any kind of non-compete that you signed, which means that you would not be able to enter this business at least for the next few years?
There is a non-compete as far as data analytics for the industry, the healthcare industry, for the next 3 years in the markets that they are in.
So you will get these funds in the next few months once this deal is closed. What will these funds be used for?
These we'll get the funds by the end of February this year. I expect that the deal should get closed. It's subject to our shareholders approving it, and we've called for a extraordinary general meeting on the 13th of February, and after that it should get closed. At the moment, we will use these funds to just retire debt. So we'll have about 6,500 crores, which will be used to retire debt today. And over time, we will see opportunities for how we can invest it and grow.
Okay. One concern that the market has, and I just wanted more clarity on this, is this one of the reasons which the market also speaks about why this deal is done? Is it because there are concerns that the other businesses are facing? We've seen what's happened with the financial sector. We've seen what's happening on the real estate side. So as something to come, probably shareholders, what they are thinking. Was this a forceful exit, or is it because you want funds to allay concerns what's happening on the other side of the business?
I think first of all, let me clarify that this is a good return, and I have been always saying that if we get a good return, then we would like to monetize it. That's one. If you look at the history of our group, we've always looked at everything in the best interests of shareholders. So whether it was when we sold out the Abbott transaction, or when we did the Vodafone, and when we've done DRG, it's always been that we believe that our role is to do what is in the best interest of shareholders. And we felt that at the value that we were getting, this was the best interest of shareholders. It's not because we have problems in other businesses, because we have already, we're in the midst of raising a rights issue, and I think with the preferential issue which CDPQ has put in and rights, we'll get about 5,400 crores. So it's not a matter of cash for the existing businesses.
Just one final question. So with this money, are you comfortable with the debt situation? You spoke about it will be, to retire debt, but overall, are you happy with how the debt situation is facing out for Piramal?
In fact, our debt equity ratio is now it's below 2:1 with all these funds coming in. So it will be, we will need to see how we can use the equity in the right manner. I look at the whole financial services play now as a consolidation play, and with so much of equity, this just gives us that much more room to take advantage of the consolidation.